Okay, so the NFP did come higher than expected. What a surprise. And the previous was revised up. And we had the NFP moving the whole market. Okay, so euro-dollar moved, US dollar yen moved, US dollar index moved as well. We had all of those types of move happening. Unemployment rate came in lower than expected, so that's pretty good, and even lower than the previous. That the previous has been very sticky for 5 months, around 5 months, and now we have like all the way down from the previous as well. The only thing that was bad in a sense was the average hourly earnings, below the previous, below the consensus, but it's still somewhat okay. Let's break this in parts and let's see what we can trade with it. And do I think that the US dollar is on a really, structural change for a continuation up, or will it continue to go down? Before we go any further, don't forget to subscribe to the channel, give us a thumbs up, and also join the Telegram group, because that's where I will be live every Tuesday, Wednesday, and Thursday. I send the link, the Zoom link, into there every 4 p.m. Tuesday, Wednesday, and Thursday for you to join for free, no costs, nothing. Cool. Most likely you've gave thumbs up and you subscribe to the channel and you've joined the Telegram. So let's go to the video. So what have the whole thing changed? What did the whole narrative change? Nothing really big changed into a sense of narrative, because it continues to say that the Fed will cut the rates in the longer tail of the year, of the next, for this second half of this year, and the cuts will start in September. So before the NFP gets out, we were 70% of expectations for a base. So basically no cuts into July, for 31st of July, 30th of July, and 25 to 20% of expectations of a 25 base points cut. Bottom of the line here is we have now a stronger labor market, and that priced is 90%, 95% expecting to no cuts into July, and only 5% expecting a 25 base points cut. So it's a huge change on the CME Fed Watch 2 in the expectations of how the market behavior. Plus, if you look into the next quarter, the next 2 quarters, so quarter 3 and quarter 4, September, October, and December are expected still to have 75 base points all combined. So 25, 25, 25. 25 September, 25 October, 25 December. So all of those ones is still the same, haven't changed anything. And that being said, US dollar has been a little bit more stronger, okay, for 2 reasons. First reason is that there is no interpretation of a cut into July, so that's out of the way. Second is the data is much more aggressive than what was expected to be, and the most, highly concentrated into the previous of 144,000. So the consensus was actually 111,000. The actual came in at 147,000 jobs addition, but the previous was 130,000, and then was revised it up to 144. So the previous revised it up, the actual higher than the consensus. This is all bullish for the US dollar. US dollar rose more than 0.5%, so more than 0.5%, half a percentage, half 1%, in less than 15 minutes. All right, so around 10 to 13 minutes was that whole move up. With that, we have euro dollar going down 70 pips. We have US dollar, Japanese yen going up more than 1%, so we're nearly 1%, 0.9%, and that is around 50 pips to 60 pips. And then unemployment rate was at 4.1%, so that's really great. Okay, as I say, I wasn't expecting to have more than 4.3%. Maximum 4.3% would be my bottom line, because the expectations of the Fed were between 4.2 to 4.4. If they got to 4.4, that was going to be really bad, because that's the maximum of the range already. But it came in to be at 4.1%. That's really great. The previous maintained the same at 4.2, but remember that the 4.2 have been going around for months and months. Okay, so have been going around for for April, from May, from March, all of that have been going around. So not the best, all right? And then we have like below the previous, it's really, really awesome. Average hourly earnings came in at 0.2% from the consensus 0.3, so that's really okay in a sense, because, you know, we're talking here about money. One thing that will be good is because people want to spend as many, okay? There will be more people spending, but those people spending will probably be reluctant. It's the same sort of spending in a sense, because we had more people jobs added, but we had those people are getting paid less at from 0.4 to 0.2, so it's a 0.2% drop, so half of what was previously, okay? So that was the whole NFP. Now, do I think that this US dollar will continue to be stronger and continue to, you know, go higher above 97, above 100, above that areas? No, I think that this is a really good possibility of continuation to short the market, okay? I'm not saying that we won't be looking at a little bit of more retracement. It can go above 98, it can go above 97, but it won't be staying there for long, okay? It won't be the trajectory of the market, because the market now classifies higher probabilities of September, October, and December cuts. Therefore, no July will be done, but we still have 75 base points to be done. So therefore, the underlining of this whole structure is still bearish. So don't get confused, okay? Look at the bigger picture, look at the bigger macro. We still have the labor market very strong, but the picture is still the same, haven't changed from yesterday to today. It only was an aggressive move because it was much higher than expected, much better than expected, so US dollar gets long positions done. But in a sense, the next couple weeks, the next couple months will probably continue to be a decrease into the DXY. And that gives an opportunity for us to enter short on US dollar, Japanese yen, to enter long on euro dollar, to enter long on Aussie against the US dollar, to enter long on pound against the US dollar. Even, you know, risk on currencies like Australian dollar and New Zealand dollar, they had a really bearish move soon as the NFP gets hit at 10:30 p.m. But after that, like after 10:45, 10:50, 20 to 30 minutes afterwards, we can see already a pullback up. All right, we can see the whole move down for the bearish, for the bullish NFP and the bullish US dollar. But afterwards, that's it, finish. You know, risk on back into the market. Dollar, Australian dollar goes up, New Zealand dollar goes up. So don't get fooled. Stay, you know, stay looking at the bigger picture of the market. Don't look into one data or another data or this or that. Look at the bigger picture, and I still believe we can continue to have the XY below 90, 95 to 94. Now, if that was helpful, don't forget, like the video, share with your friends, and join the Telegram. I will be back next Monday, I will be back next Tuesday, the whole week I will be here. Don't forget that Tuesday, Wednesday, and Thursday, we're going to be having the webinars. And that's where it's your best time to have contact, you know, to have contact with me, because I can answer your questions, I can talk to you. You know, it's a really good moment for you to interact with me and share your thoughts on the market as well. I catch you later, or if you're not coming on the webinars, we do have the replays, okay? But it's best if you come to the webinars, it's free. Guys, have a great weekend, enjoy your weekend, enjoy your family, and I talk to you next week. Yeah. Happy Friday, guys. Bye-bye.